Well, we're going into the second half of the year, and what a first half it was. This was just the ninth time in history where the S&P 500 was down by more than 8% to date at one point, only to finish the first half of the year in positive territory. The other 8 times, 1957, 1968, 1978, 1980, 2003, excuse me, 1990, 2003, 2009, and 2016, they produced an average gain of 2% in the third quarter and 5.3% to round out the second half of the year. It's a small sample size, but 6 of those 8 occurrences produced gains. The only 2 times they did not was when we actually had recession in the second half of the year in both 1957 and 1990. So for the macro watchers out there like myself, that's good news because the data can actually determine whether or not this market keeps going up. But that's not really all the second half has going for it right now. The rally in the S&P 500 off the June low produced a rolling 2-month return in excess of plus 20%. That's even more rare. That's only the 6th time that's happened. It's a small sample size again, but it's good news abound. 100% of the time, the market has traded higher 1, 3, 6, and 12 months later, averaging gains of 8.2, 12.5, 16.3, and 30.8% over those time spans, respectively. So that brings us to July seasonality, of course, which you won't find a red July for the past decade in either the S&P or the NASDAQ 100. Over the past 20 years, the S&P 500 has rallied 80% of the time to the tune of an average gain of 2.48%, while the NASDAQ has been even better, gaining 85% of the time to an average gain of 3.64%. So, guys, my question is here, as the contrarians that you may be, this feels
there's going to be a quiz?
Contrarians.
There's going to be a quiz? You didn't tell me there was going to be a quiz. All right, go ahead.
Your desk. You'll see your blue books now. Please open and turn to page 1. This is obviously a good news, right? But you guys are contrarians here. So can you square this for the audience? When you see something like 10 out of 10 Julys that are green, is your natural inclination just to fade it, or do you say the Schwartz is too strong?
Has it been 10 out of 10 Julys have been green?
Yeah.
For both the NASDAQ and the S&P.
My natural
thinking.
I mean, yeah, I would fade it. I mean, if I saw 10 blacks in a row, I'm not betting black on the next, I'm betting red. I mean,
even though it's a 50-50 shot.
I know.
Right. Okay.
I know. I mean, yeah.
I would probably do the same thing.
Who's not going to do that?
Yeah.
So, I mean, is that
the market is, I'm sorry to interrupt you there, Chris. The market is different than a coin flip.
Thank you. I do know the market's different than a coin flip.
I knew jet lag would come in.
I also feel like
know when.
I also feel like
that moment, ladies and gentlemen.
I also feel like we're at a decent price extreme here. So I feel like this is an opportunity.
If you think this is an opportunity, how are you structuring?
Because of the present market move that we've had, right? Nothing to do with July and 10 out of 10. That just puts a little bit of icing on the cake. Agree or disagree?
Yeah, I mean, I think the fact that it's 10 Julys up in a row and this one we're at record highs and we're overbought, I think. I don't know. Yeah, sure. I'll take the downside. Fine. I mean, I don't know what the point, I don't know where you're going with this. It's just, if you're asking me which side I would take, I'll take lower.
I think it's important for traders to. Here's the split that I'm having in my head. There's a contrarian in me that says 10 out of 10 in a row. Like that's impossible. We're not going to go for another one here, even though the S&P 500 streak is actually 13 Julys that, or excuse me, the NASDAQ streak is 13 green Julys in a row. But probabilistically here, right, if you see a trade, it's like, okay, historically the sample size suggests it's going to turn out this way most likely. Why would I bet against it? So I'm curious, as folks who embrace both sides of that mantra, you want to be contrarians, but you're also data driven. How do you run into a month like July where it's so heavily tilted on one side of the equation? Do you reconcile that? No.
Why would you? I mean, we don't reconcile anything. I mean, that's not the way we think. I mean, I'm not kidding. If you had thought that way, then you never would have sold a triple witching. In the last 4 years, almost everyone's been down. So who the hell knows? Mm-hmm. Like I just don't think you can look at things like that.
Okay, so work with me here then. Let's say we want to look for an opportunity here because things are cheap and the market is stretched. How are you structuring that short delta trade up here?
I mean, with with volatility as low as it is right now on a relative basis, there's not a lot of good premium to sell out there. So I have a small short position, and it's mostly futures, index futures. I just don't sense that there's like a lot of skewed, strangle opportunity, things like that. I just don't feel like it's just not there for me. So, anyway, that's how I'm structuring it. I'm just short premium. I'm sorry, I'm just short delta, not premium.
Which makes it a lot less strategic, right?
Which is a lot less strategic and a lot less probabilistically sound. It's a lot less tasty.
You're in uncharted territory.
It's not my favorite way to be short. It's very untasty.
And so and I'm just trying to work through this here for the audience. So by kind of forcing function of the market's conditions right now, in order to express a short delta view, you're saying that you have to step outside of what you would be comfortable doing in your typical mechanics.
Yeah, it's not. I'm not stepping that far outside. I'm utilizing a different approach. Normally, I tweak my deltas based on where I sell the premium the most. Right now, I've taken a slightly different approach and just sold some just straight delta.
Not even using like futures puts, right?
Yeah, no, I'm not using anything, just the straight futures. Mm-hmm. It's not a way I usually trade. It's maybe a way I've traded a little bit in the past when volatility is really low. But, I'm also, position size right now is relatively small. And I think that all of us are underutilizing our capital in a pretty dramatic fashion right here. If I thought there was something that was, really overdone on an extreme on the downside, I would buy it, but I don't see anything. This is what I put up, Chris, because these guys asked, hey, what are you trading? So on the bullish side, this we did yesterday before the Apple rally and all that kind of stuff. Mm-hmm. I liked Apple, Enphase.
Apple's up again today.
I know, it's up about almost $3. Mm-hmm. Apple, Enphase, and Baidu. I don't know what Baidu's doing this morning.
I could take a look. Some of the other Chinese stocks were lower. I didn't look at Baidu. It's unchanged, down 9 cents.
Yeah, unchanged. And Enphase today is up a little bit. Mm-hmm. And those were my 3 longs. And the neutral side, only because we've been playing these neutral. United Health, we've been short premium in there. United Airlines, we're short premium in there. And Intel, I don't have much left in there. But it's just, if I was looking for a neutral trade. And on the bear side, Coinbase, Meta, and RBLX are like my 3 favorite shorts for no other reason other than price extreme. No other reason. So this is a market where I kind of feel like, you can be a little bit more directional because you kind of almost have to put some money to use. But we are very, very, and I can't stress this enough, Tony, the same way, we are very under invested. We are as high a percentage of cash right now as we've had all year.
When you put it that way, I know that a lot of people keep cash on the sidelines during times like this. Do you think it's prudent, perhaps, as you mentioned, your short delta bias in stocks, to maybe take out some proverbial flood insurance while it's really sunny out? Like, what's the harm in getting some short deltas in your book right now, given how cheap everything is?
There's no harm in it, other than for a lot of people, it's very difficult. It's very difficult to fade. It's very difficult to fade a trend. I mean, just a lot of people just aren't comfortable with fading trends. And, a lot of people, especially kind of more old school technicians and more old school traders, kind of like to see the market turn before they roll over, before they get short or anything like that. And I would not consider this any stretch of a turn. In fact, the market just looks like, the Dow's up 150 today.
Yeah, the Dow's been the strongest all day today. Yeah. It's leading this way.
I mean, there's nothing I'm looking at right now that makes me think, oh man, I got to be short my.
I missed some opportunity here.
Yeah.
Getting short the market, right?
Yeah, I mean, I thought you could get a quick. I was hoping maybe there'd be a quick 50 handles.
50 handles. That was the number I had in my mind. Mm-hmm.
Yeah. So far, it's been 20 and nothing beyond that.
Yep. Dow's got Goldman Sachs up almost 5, UNH now up 4 and change. Apple's a big one in there, up 3 and change. Honeywell, Nike, Boeing, all higher. McDonald's up by 2.
Yep. Anyway, basically, Chris, we don't think much about this market right here. Like as far as, risk reward right here, maybe it's pricey, but I don't think there's that much opportunity.
For the big directional bias?
Yeah. Which is, by the way, very par for the course. Like, we've had some wild moves this year so far. Obviously the beginning of the year, then we had the April moves, and we had the whole rally back in May and June. There's been some wild moves. I mean, we've had, 25% down, 25% up. I mean, we've been all over the place in the first 6 months this year. Who would have thought we've had basically a 50% move between, range from low to high? These are massive moves. It's okay to slow down for a little bit.
Yeah, and this week it was indicated early on Sunday that
68 handles.
Yeah,
which is tiny for this week. So I'm not expecting much.
It's funny that you transition there, because I wanted to spend the back half of this particular segment of Let Me Explain talking about perhaps lessons learned from the first half. For example, I have 2 rules that I usually follow that I really fumbled badly in the second quarter. The first rule is that when someone who has their hands on the economic levers of the U.S. economy says it's time to buy stocks, you should probably just shut up and buy stocks. And we know this because of what happened in the Obama years and the global financial crisis. We know what happened in Trump's first term. And sure enough, Trump was tweeting out in early April, now's a good time to buy stocks. Okay. The other thing, of course, is staying mechanical. I was very fortunate that during the COVID spike, or rather crash in the markets in 2020, I was on paternity leave. And so I didn't have any trades on my long-term investments, right? But like no trades on. And so by the time I came back to work in early April, I didn't have the shell shock that most other people had. And so when Powell had come out and said, yeah, we're going to do whatever it takes, to me, okay, the Fed chair is saying we're going to throw the kitchen sink at this, shut up and buy stocks. It was very easy for me to dip my toes back into the water. Mm-hmm. But this time around, it felt like I had a little bit of shell shock. I wasn't long stocks in February, March, so I really avoided the pain for the most part. But it took me a little bit, a while to get back onto the train, like a month or so. And then I ultimately participated in the May and June chase higher. But I'm curious, is there a lesson that you guys take away from the first half or to impart upon people? And it could be something as simple as you just said it yourself, Chris, stay mechanical. Don't let your emotions get the best of you.
Well, I think that's what we're doing when we say, when we sit here and say, hey, we're at the lowest we're at the highest level of cash and the lowest level we have committed right now, even though we're opinionated, I think that's essentially what we're saying.
It sure feels like summer.
I mean, no. Well, it's like if you go back to the April lows, it wasn't that we were bullish, but we had, almost 65 to 70% of our capital committed because we just felt the opportunity was there. Now it's the exact opposite. So, we just have very little capital committed. I think
you haven't gotten this kind of what looks like, obviously in hindsight, you could say this was a capitulation to the downside, but we haven't had these large, big moves. I know it's been a sustained
this has
rally.
Been a pretty big move, yeah.
Yeah, but a sustained rally, but not that.
Well, you're never going to get the same thing to the upside.
Well, you might get a V top the way we've had V bombs.
Yeah, you could.
You could. I think you're more.
You could double top it here if you want to be technical. You could easily get a double top up here, right where we are. I don't know. Who knows? That's what I'm betting on for a short-term trade. But nothing much. This is just a trader market. It's a trader's market. I think it's, I feel like this is what we've been seeing for the last 25 years.
Yeah.
I don't feel it's any different.
Same as it ever was.
Yeah.
What surprised you guys in the first half of the year? Was it the decline and then sharp rebound in stocks? Was it
I think
gold?
that was I think the magnitude of the decline and the speed at which that decline happened, I think that was pretty shocking.
I'm more shocked by the up move than the down move.
All right, well, whatever.
Yeah.
Either way.
We were making highs in March and we sold off.
Honestly, Chris, our brains are wired differently. We just trade them. I know it sounds crazy to people that are listening and to you, maybe to you and others. We don't I hate to say this, but after doing this for 40 some odd years, I'm almost immune to the noise. I just trade them. I love talking about the noise every once in a while, just like, just because I think it's a good talking point and it's fun to debate over certain things. But I'm pretty immune to the noise. I think Tony is too.
Yeah, for the most part, sure.
Yeah, we don't overthink this thing.